Folks, good evening. Good evening, everyone. Evening. Welcome to Dealmaker DFW. I'm your host this evening. Just call me the real one with all the estates. My name is Big Tex, and I will be your host tonight, helping you guys enjoy another fantastic Dealmaker networking event. We've got some fantastic announcements, some splendiferous hosts. I just made that word up. I'm looking forward to engaging and entertaining with everybody tonight, and hopefully everybody will take away something and be able to not only just grow, but be able to take these moments that we have tonight and what's the word I'm looking for? Have these moments tonight and grow your business exponentially. So I want you guys to lock in kind of a run of show. Excuse me real quick. We're gonna have a kind of a run of show. We'll break you guys out. Everyone will come out and we'll break out into some rooms. That gives you an opportunity to do some have a conversation with our speaker of the evening, and just a fantastic overall great opportunity. But let me talk to you guys first about what is happening in the world. It is that time of season. So when we were in person, I challenged everyone to look at the colors of your brand. See if your colors are talking. Now that we're coming into the spring and summer seasons, I really want you guys to stay on top of that. And however, let's walk into part 2 of that. I also want you guys to now take that same energy, and I want you guys to filter through your contact list. It's time to revive that contact list. It's time to revive your CRM. It's want to get back in touch with your 80-20. Okay, let's create a new 80-20. I think we're gonna have some good things come up out of here. So I have the host, the co-host, the owner, the man himself. I know he's on here somewhere. Felipe, are you? I see that mouse moving around. Are you in there somewhere?
Hi, good evening. Can you hear me?
I absolutely can. Felipe, me and you can just talk to ourselves. We're just, if anybody else wants to listen, then they can.
Absolutely, man. So I'm a little festive today. I'm actually calling in from New Zealand. So my internet might be a little iffy. Am I coming through okay?
Yeah, so it's 6 o'clock in Dallas, Texas. What time is it and what date is it where you are?
So I'm coming in for the future, guys. I am 18 hours ahead. Today's March 20th, and it's 12 p.m. I just woke up. Just kidding. So my beautiful bride, we actually had a little funny situation. We double booked a Hobbit, wherever they filmed the movie Hobbit. She went to the movie set. They have a whole theme park, and she's there now. And I was supposed to be there, but since we were 18 hours ahead, I wasn't able to coordinate correctly. So I canceled, and she went on my behalf. So she's having some fun, and I'm here.
I hope she brings us, me and you, back a souvenir.
Oh, she better. I told her that's the condition on coming back.
Absolutely. So,
But yeah,
Felipe, talk to
I
us.
was very disoriented coming here because it's like you going ahead of time, and it's always so strange. But anyway, man, I want to welcome everybody to the call. I am so glad you are here. We're going to have a fantastic time. I appreciate you spending your evening with us, and we're going to make it as productive and as valuable as possible. We have an amazing keynote speaker presentation that I'm personally looking forward to it. So I say we get started. Do you have any other welcoming words for them, Big Tex?
Yeah, Felipe, I I really wanted to encourage everyone tonight to what we a few weeks ago was just the most fantastic energy that we've seen. Everyone was engaged. They were asking questions. The speakers were fantastic. I want to keep that energy moving on, right? And again, as I alluded to, it's the spring season, so it's time to revive and re-energize and dig a little deeper into that contact list and clean that up a little bit. So that would be my words of encouragement today, my friend.
1000%. I couldn't say anything better than that. I hope you will invite your friends to join the call. We do this on every third Thursday of every month. So, just mark your calendars. We have the dates lined up on our website, but just mark on your calendar, man. Every third Thursday, we'll do this, and we're going to bring you some valuable information. And yes, please interact as much as possible. I have the Deal Maker Corner up. That's our virtual bulletin board. So any wants and needs, if you have any deals, any capital, anything you want to share with the community, please do so. You can find it right on our website. And like I say, stay engaged, use the WebEx chat. We get of course, giveaway prizes at the end. You must be present to win. And then we're going to do a little breakout session so you can also engage and network. How does that sound, Big Tex? If I go off video, it's because of my Wi-Fi. I'm on the ship's Wi-Fi,
No.
so it's a little iffy, okay? So if I go off video, it's because we're having some lag issues.
That was me. That was all me. You sound crystal and clear.
Beautiful. All right. Well, let's get the show on the road. Tonight's challenge, as always, as Big Tex just said, make sure you meet one new person tonight. Connect with someone you haven't met before. Exchange info. Learn their story. Learn their why. Learn one new thing to add to your tool. And I'm sure that will not be a problem with tonight's presentation. And if you have any aha moments, make sure you hold on to it so you can share with everyone so we can all learn together. Your host for this evening is myself, Felipe, and my good friend Big Tex. Geraldine is here in spirit. She is probably inside a Hobbit house right now. So I told her to take lots of pictures. If you are logging in on the call, we are in New Zealand. We are doing a 3-week family getaway and visiting some beautiful scenery. So that is where she is. We were double booked. We are 18 hours ahead. So we had scheduled this grand tour of the Hobbit movie set, but then I had to stay behind because I didn't expect that it was going to be 18 hours ahead. We scheduled for Friday, in which today is Friday here in New Zealand, but Deal Maker is Thursday back home. So
Felipe, so I have a question for you.
yes, sir.
Tell me, so we're going into the breakout rooms, right? Is that what's next? We break it out? We jumping?
We'll probably let's see what I have in the agenda here. I'm just going with the slideshows that I built this morning. But yeah, we'll see if we'll do a breakout. If not, we'll bring in our sponsors. We'll do a market poll segment, and then we'll get going with our presentation.
Well, let me ask you this. I think we go to the sponsors if you're fine with that. But tell me about your real estate week. Anything good happen in your real estate week?
My real estate week, let's see. We have one transaction closing. It's actually closing today. We might sign tomorrow, but can't complain. We got a real estate transaction done. It's a land sale. We're doing a wrap seller finance, and then we're gonna hold on to the note. It's 18-month payment with a balloon due, so we won't even have to sell the note. Justin, in which he will be expanding more on what seller finance and selling notes is. That's what tonight's presentation is all about. So we're actively doing that. So can't complain too much. That's all we have going on. A little bit slow since we've been traveling since last week. So I haven't been as active as I like. But
Okay.
you know, like a lot of entrepreneurs on the call, if you're not constantly working on your business, even though you're on vacation, you kind of start getting itchy and you start getting anxious. So I'm at least happy that we got one transaction done this week.
Nice. Okay. I just figured I'd throw that up, sometimes they
Yeah.
like to hear, from the top what's going on in that fantastic brain of yours.
Well, you're too kind, my friend. I appreciate that. But everyone on the call, I have our Lowe's Pro discount on the screen. You want to make sure you take advantage of that. This is our gift to you for being on the call. So if you scan that, there's actually a presentation from the account manager that handles all account. This is a nationwide group discount, and it is very legitimate. You can get up to 25% on the cash out. So make sure you take advantage of that. And then I want to thank you all of our sponsors. Some of them are here on the call tonight, and we'll give them the floor here in a little bit. But please support them when and wherever you can. If you scan the QR code there, you will take it to our main homepage, and you can see all of our sponsors there. As I mentioned, the Deal Maker Corner is open. If you want to see what that looks like, if you head on over to DealmakerDFW.com, if you go into resources and you select Deal Maker Corner, you can post anything that you have right here. Any deals, any capital, any needs, make sure you take advantage of that. And then also make sure you join our DFW Flips Facebook group. We just crossed over 34,000 members. It's a very active, free, private Facebook group that you can meet a lot of people that are doing deals in the marketplace, and you can find deals as well. So make sure you scan that and you join the group if you haven't. We kind of talked about tonight's agenda a little bit already. We're gonna keep it, moving along. We're gonna end right at 8 sharp. We respect the time. We don't want to go past that. But we'll have some opening remarks. We'll have a sponsors introductions. We'll have our market poll segment by Brian. Mr. Glenn Hull from last month was going to join us, but he had a last minute conflict of schedule. So he will be here next month. He won't be joining us tonight, unfortunately. We have the amazing Justin Bogard doing a keynote presentation for us. And then we're going to end with some prizes giveaway. And then we'll have some closing remarks at the end. And that will conclude our agenda tonight. Another sad news we have is Aaron Jennings with the Kingdom Edge segment. He also had a last minute conflict of schedule. So he won't join tonight. I'm going to miss him very much. But next month, the whole crew should be back out together. All right. Like I said, we're going to give tons of prize giveaway. We have about 6 prizes we're giving away tonight. So stay tuned for that. Also on our Dealmaker website, we have built out some really good resources for you. If you go under resources, you can go on the tools of the trade, and you can see all of the preferred services and vendors, from call centers to capital raise platforms to cash buyers. Everything you can think of, we put it all in one place for you, so you can take advantage of that. These are best of the best. We also have real-time resources with real-time data that you can take advantage of it. This is what's hot on the news, local, related to us. It's all curated for you, anything that's relevant to you. We also have interest rates, what the Fed is doing to your treasury. All that stuff is updated in real time. So make sure you take advantage of that. There's tons of goodies in here that we have for you. It's completely free. So make sure you check it out. Take advantage of that. It's rich, useful information, and it's all in one place. Okay. Three organizations, no profits that we support. We have a pledge of 3% of top line gross revenue that comes in every month at the end of the month. So make sure you support them. Also, save the dates. Here's a couple of events we have coming up. April 7th, we have a raw deal drop that is with me that I do an in-depth deal case study. We go deep on a deal. Could be a good deal, could be a home run, it could be an average deal, it could be a great deal, but we go over absolutely everything. So join me. It's free for your first one. We also have April 16th, our next virtual event. It's gonna be I'm gonna announce a little bit more towards the end, but it's the third Thursday of every month we do this, and we're gonna be hosting Chris Patterson. He's an attorney, and he specializes in 1031 exchanges, and he even does reverse exchanges, in which he will tell us all about it. So you don't want to miss. His company is called Wealth Builders, and it is an amazing resource that you need to know about. And then on June 4th, we are doing our in-person Dealmaker DFW. Back in McKinney, we are going to have two amazing speakers. We're going to have Scott Horn doing a segment of Ask the Title Attorney, anything that you have. He will answer your questions. And then we're also hosting my good friend, Major Hillard. He does mobile home park investing, and he's been in the business for a good while, so you don't want to miss that. So make sure you save those dates. It's going to be some great events. And then if I have any sponsors on the line, please raise your hand and I will unmute you. And we are going to give you we're going to give you the floor so we can let everyone know what you do and how you can help everybody on the call. All right. So if you have your hands raised, let me know and I'll get to you here real quick. I do have a new sponsor that I don't think he's on here. I don't see him on the list, but it's Mr. Stephen Palmerton. He is a CPA and an accountant, and he has been in the real estate investing space for a good while. Here is his website, palmertontax.com. Check him out, especially tax season is right around the corner. Make sure you give him some love, scan the QR code, and if you have any CPA needs, please let him know. And then let's see here. I also
We have a few. Oh, I'm sorry.
Go ahead.
We had some few sponsors. We had a few sponsors raising their hands. I don't know if you had saw it.
Yeah, okay. Let me see it. Let me see here. I have Joe Robinette. Let me find his spot here. Okay. Joe, I'll bring you on in 1 second. Let me find your correct spot, sir. And then I freeze. Hey, Joe, let me know if you can.
Hey guys,
if you can. There
can you
you
guys hear
are.
me?
Now I can hear. I can hear you just fine right now. How you doing, my friend?
Oh, doing amazing. I didn't realize you were in New Zealand, man, and still spending time with us. I love it. That's a committed man right there.
Yes, sir. Absolutely. I wouldn't miss this. I'm missing a Hobbit tour right now. That's how much I love you guys.
I love it. I love it. Well, awesome to be with you guys. Appreciate the shout out and let me come on just for a quick second. And I always like to share just success stories that kind of connect what we do to real life scenarios. And had a situation this week, a contract that got, or a contract that went, or an offer that went under contract. But what made it happen was the level of communication that we had with the listing agent leading up to them accepting the offer. And so we pre-underwrite all of our files, and we were able to remove financing contingency, move up the closing date, saving the seller a mortgage payment, and just structure it in a way that initially they were hesitant at accepting it, but just because of some of the things that we were able to do, was able to get this house under contract and negotiated some great terms. So anyway, that's just a piece of what we do in addition to, creating great mortgage plans for our clients. So just wanted to add a little success story there to give a little bit of insight. So I'll kick it back to you, brother.
Yeah, no, I love that. Thanks for sharing, man. It's always great to hear wins, especially in this environment. So please let us know. I appreciate that, man, and thank you for being here.
Amen. Appreciate you having me.
Absolutely. All right, let's see. I have Mr. Scott Horn. Let me see if I can unmute you. Hey, Scott, can you hear us?
I hear you, Greg. Can you hear me?
Oh, the man, the myth, the legend. I can hear you just fine. How are you doing?
Mostly the myth. And if you're there in New Zealand, you might be in that same status with those hobbits,
That's right. That's right. We're about the same height, so I think we'll get along just fine.
Well, I cannot.
Thanks for being on the call, Scott. I appreciate you so much.
Yep. Always fun to do that with you guys and get back here for the first time to see what goes on with y'all. But I think some of these wonderful examples I run into every day of the week, it seems like, and share those with your audience along the way. But for everybody's purposes who's on, my name is Scott Horn with Horn and Associates PC and the Owner Finance Network. And we are a very specific group that specializes in the creative finance sphere, meaning if you're buying houses with direct seller finance, with subject to transactions, wraparound mortgages, we take care of all that for you, start to finish. We provide you the legal services, title services, if you want title insurance, etc. It's available. What's cool about us is we can do FHA and VA that most people cannot do. After 10,000 plus closings in this sphere, we get this business. And we are very narrowly focused on our clients, just simply handling their creative finance side. We handle their landlord tenant if and when they need it. And we handle foreclosures, actually around the state of Texas, if they need that as well. And we keep ourselves in that sphere. Even in our law firm, we're fairly narrowly focused, but we can also work through situations such as if they have solar panel issues out there. Our litigation counsel helps remove those from the property if that's something that is wanted by a client out there. But we just believe and feel after 35 years in this business, Felipe, after 7,500 houses that we've done ourselves personally, that this is probably the greatest wealth building tool there is in our single family residential sphere in some format when you compare it to all the other angles that are out there. So if anybody's working within these things, they have questions, reach out to us through the Owner Finance Network. Check us out at the ownerfinancenetwork.com. We have probably 1,500 free videos on there on our YouTube channel where real estate investors can go there if they have an interest in learning the creative finance industry, which is everything from start to finish and everything in between.
Beautiful. I love it. And man, 10,000 transactions. And I thought I was hot stuff when I did a few hundred.
That just means I'm
That is
old,
awesome.
Felipe.
Well, it means you're wise. It's different.
Okay, wise
you,
and
Scott.
old. Let's just put them two together, okay?
There you go. Thank you, Scott, for being here. Please check him out. We're going to have all the links available if anybody needs help with anything. Scott is a wealth of knowledge. He's going to be speaking in June 4th, and I'm looking forward to it very much. A little secret, whenever I have something come across my desk and I freak out, Scott is one of the first persons that I think of, and I reach out to him, and he puts us in the right path. So thank you, Scott.
You're welcome.
All right, so let's see here. Do I have any other sponsor? Our sponsors are live today. I guess they didn't get my smoke signals and my spam, everything that I did. So we're gonna keep moving on.
I don't know what's going on with these guys.
I don't know. How we looking, Big Tex? Everything good?
Everything is good. Everything is good.
All right. Well, let's keep moving along. Even Geraldine, which she's usually the one with our Odyssey Soul Travel, but on the next call, we'll get her squared away. I think we're gonna get ready for our next segment, which is Mr. Brian Maddox with Bayo Mortgage. This man is a wealth of knowledge. He always gives us some golden nuggets. Let me make sure he's on here today. Yeah, he is. There he is. Let me make him a presenter and a host.
Hey, there we are.
Hey, Brian, can you hear me?
I can. How are you today?
There you are. I'm doing fantastic, my friend. Thank you for being on the call. I'm looking forward. This is one of my favorite segments, so I'm looking forward to it.
Man, I'll tell you what, like I try to keep these short and sweet, but there is so much news going on. I'm going to dive right in for you. See if I can share my screen. Which one do I want to share? This one. There we go. Brian Maddox, Bello Mortgage. I'm a mortgage broker, work with over 240 lenders, and I'm going to do a quick market update. And we're going to mostly talk about all the events that you're hearing in the news. And we're going to start with oil. So if you were in the market to pull out some money, you really should have locked your rate in on February 27th. That was by far the best day to lock in an interest rate for 3 years. And we had just seen the average rates for homeowners that are going to live in the house get under 6%. We touched 5.9 something on the 27th. Then that Saturday, we bombed Iran. So that disrupted our good news and our gravy train with good interest rates. So if you look at oil, you can pretty much tell right now what mortgage rates are doing by watching the oil chart. If oil goes up, mortgage rates are going to go up. And today was a nasty day in the market. The last couple of weeks we've seen, I'm going to zoom in here, and you can see just these huge swings, right? Like these are 10% swings every couple of days, which is just driving the markets kind of crazy. Don't look at your 401k. It has been turmoil in your 401k as well. But oil has really overridden all the other major news things and events that have happened this last week. So we got the jobs numbers from the BLS, and jobs is an indication of the economy and the health of the economy and what's happened, right? When you go to the doctor, they check your blood pressure. That's a leading indicator for problems. We use unemployment for the same. And we saw February for the BLS report. This is the government's favorite report, but it's been horribly inaccurate recently. But it came in really bad, minus 92,000 jobs. And they revised down, which they always revise down the jobs numbers. So I almost would put money on the February number will get worse later in the next month or two. This will get worse. But they revised down January and December jobs reports by $69,000. These are massive, huge, massive hits. In a market where we weren't bombing Iran and oil was going crazy, we would have seen mortgage rates get better based on the jobs reports coming out, showing a decline in jobs in the economy. We also had a Fed meeting, which this did move the market a tiny bit after the Fed meeting came out. The minutes came out of the meeting. They did not cut interest rates. If you followed me last month, and we'll show you again, we look at a predictive tool that will kind of indicate what's likely going to happen. So we rarely get surprised on the actual outcome of the Fed meeting. What everybody kind of grasps a hold of is the commentary that the Fed chair says, usually comes out about 2:15 or 2:30. And he came in and he talked about inflation. And anytime the Fed chair says inflation isn't doing what we want, that is bad for mortgage rates. So after the announcement that we're not going to cut rates came out, we did see mortgage rates come up a bit because he talked about inflation and it's not coming down as much as they hope. So you can go read this article on CNBC. I'm not going to go into detail too much, but we stayed at the target range of 3.5 to 3.75. So every couple of Fed meetings, they also do what they call a dot plot. And this is where they pull all the Fed members, and it's a kind of a secret ballot, if you will, and they suggest what they think is coming. And on this graphic, it's showing you what the average is, right? So we're going to take some Fed chair members think rates are going to go up. Some Fed members think rates are going to go down. This is actually a flat. For this year, it's flat, but next year you see a little increase. Anytime you see the dots going up, somebody thinks we should be raising the interest rates. Some Fed members think we should see 2 or 3 rate cuts this year, but they're not the majority. And not every single one of these Fed members is a voting member. Some of the Fed members are just giving their input, but they're not going to actually vote on whether or not we cut rates or not. So we are still thinking that we're going to see a rate cut between now and next year. And the Fed members think we're going to see rates stay flat. And if you go Google mortgage forecast, you'll see a Yahoo Finance article that comes out about every 2 to 3 weeks with updated information. The Mortgage Bankers Association and Fannie Mae, they also both think rates will be flat for the next few years. When we look at the CME group, this is the Fed Watch tool. And what this actually analyzes is economists that bet, if you will, by buying future contracts on the Fed funds rate. So they're actually betting with their dollar on short-term contracts what they think the rates are going to do. And they extrapolate that betting or those trades, and they put a percentage of what we think is going to happen. Now, the next Fed meeting is April 29th. And according to this, there is a 7.2% chance we see a Fed rate hike at the next Fed meeting. If you scroll down to the bottom of the page, you can see where we are right now. And then you can see the probability and the historic probability. So it goes back a day ago, a week ago, and a month ago. So a day ago, it was a 100% chance we're not going to cut rates. We didn't cut rates. It was spot on. It almost always is spot on. But a day ago, there was not an indication that we would see rates go up. And right now, we've got 7% chance of rates going up. So when we fast forward to June, that potential for rates going up increases. This is where we're at now, between 3.5 and 3.75. They can't say 3.625, but that's really where it is on the current rate. When we look at July, there's a 61% chance that we're going to see rates stay the same, a 32% chance we see rates cut, and a 5% chance we see rates increase. So if you go out and look at next year, there is some economists that are voting that next year we're going to have higher rates than we have this year. More of them are going to say we're going to stay the same. We're sitting in here this 3.5 to 3.75 range or lower. So we'll have to watch, between the Fed dot plot. This is softened. They did think, if you looked at the last dot plot, they thought we would see 2 or 3 Fed rate cuts this year and maybe another 1 or 2 next year. And now it's kind of looking like maybe we see 1 rate cut this year. And there is a potential that we see rates go up. So oil has really just overridden a lot of the news that we would normally see. We're going to take a quick look at the charts. The easiest thing for most people to watch is the 10-year Treasury. You can just Google US 10Y, and we see a spread of over 2%. We had kind of gotten this spread down between the 10-year Treasury and average mortgage rates. Historically, the average is 1.75% spread. So if we were in normal historic times, we would expect interest rates to be right at 6% right now, with a 1.75% premium over the 10-year Treasury. But we've actually seen, with this inflation data and oil data coming in, we've seen that spread widen. We had gotten under 2% spread, and now we're back up over 2%, which is an inflationary sign. When we look at average interest rates in America, this was the 27th. Look at that, 5.98. Man, if you locked in, you're feeling good right now. And then today we're at 6.43. So we've seen rates go up almost 0.5% in a couple of weeks because of this oil situation. And that is going to be the main news and the main headline. The longer this conflict goes on, the worse it's going to be for us borrowers and everybody else in the world as well. So we want this to wrap up. I did go pull the investor rates. So if we do a conventional loan today, this samples out where rates are across a whole bunch of lenders. This searches about 100 lenders that I have access to. And today, Penny Mac had the best investor, 20% down, Fannie Mae, fully underwritten. You would actually get a little credit. So this shows a green number, which means you'd get paid. I just did a $350,000 purchase with 20% down. You'd get paid $588 from the lender, or you could pay $451 and get a 6.875. So, a couple of weeks ago, we were seeing investors in the mid sixes, 6.625, 6.75. So this has come up a bit. I looked at DSCR rates for you as well, and you can see these are time stamped. I'm in Eastern time, so I'm an hour ahead of you. But for a DSCR, if we do a 5-year prepayment penalty, we're sitting at 6.75. So DSCR rates are oftentimes cheaper than conventional rates because you can have a prepayment penalty. So I wanted to show you what investor rates look like, because the owner-occupied rates, right now we're spending about a half a point higher for an investor versus an owner-occupied rate. Quickly, an overview, because I know my time is running short, but house prices, we're pretty much flat nationwide average. This is measuring all kinds of different tools that, in different data sources. So the gold line is the average of all of these. I'll make this just a tiny bit bigger, but we're just above flat on our real estate pricing year over year. If you look at the major metros across America, this is looking at a 1-year change in house prices. The size of the circle is how big the MSA is, the market. And then the color of the circle is going to be if things are up or down. And the Northeast, they continue to have light inventory. It's hard to find housing up in the Northeast. Texas, Florida, parts of the West are just not having the same success. And we're seeing like Austin is down 5.9% year over year. That's not as bad as Punta Gorda. They're down 11.2%. When we look at the major metros across America, these are the top 50 largest metros, and how real estate looks for, again, this is a 1-year variance from February 2025 to February 2026. So I'll make this a little bit bigger so you can kind of look at the markets you might be curious in. Austin, not looking awesome on this chart right here. That could be some buying opportunity. And then if we look at home prices since the peak, which, around, October, November 2022 is what people consider the peak of real estate prices. So this is showing you the difference in prices since the peak of the market in 2022 to current. Punta Gorda, 25% down, Austin, 27% down. So if you're out there buying, that's not a bad thing. If you're trying to sell, you don't like this quite as much. If I can be helping you in any way, I actually do shop with 240 different lenders. I've closed with over 60 lenders in the last 15 months. So we're going to do the best thing by you, but you can scan the QR code and get a copy of my digital business card. And I'm looking forward to seeing y'all next month.
Thank you, Brian. That was such great information. And
Nice.
talking about gas prices, as I mentioned, I'm in New Zealand, and the prices here are in liter, and it's been a price difference of over $1 just day by day, and the country is freaking out because they only have a 60-day supply of gas, and it takes 30 days for the tankers to arrive. So I think everyone is feeling it. So it's no joke.
I've heard a lot of people say, "Or we produce our own oil. Why is our gas prices changing?" And I've got some trucker customers that they're in diesel, especially. They're feeling it. They're really feeling it.
Yeah.
And you got to think, if you produce gas locally, but the world has a shortage, what are we going to do with our gas? We're going to sell it, right? So the global economy still changes our gas pricing, and 20% of oil goes through the Strait of Hormuz. That's a massive amount. So we're a little insulated, but our producers locally, if they get paid more to sell it overseas, they're selling overseas. That raises prices locally. So it's going to affect everything. And inflation numbers, if oil stays high, inflation numbers are really going to jump, and that's going to be bad for mortgage rates.
Yeah, awesome. Well, good deal. Well, let's keep the theme. Any wins for you this week?
So
give us a
I'm
little
looking to buy a
taste.
second co-living home for my son. So we identified 2 houses over the weekend, and we're trying to figure out if we're going to make an offer on either of these 2 houses. But we bought him a house last year. He lives in the house, so we were able to do 5% down. He's on the mortgage, so we're getting owner-occupied rates. And to the IRS, it's an investment property, so he's got paying roommates. To dad, it's a free home for my son because the roommates are paying the rent. It's a great strategy to go buy a house with maybe a college student and do student housing. So that's our big win right now.
I love it. I love it. It's like house hacking.
That's exactly.
All right,
Yep.
awesome. All right,
That's
awesome.
pretty cool.
All right. Well, let's get the party continued here. Let me claim back my host. Can y'all see my screen now? Can you see a big text?
I can't. Now I can. Yeah.
You can? Okay, awesome.
Yes, sir.
All right, we are getting started for my good friend Justin Bogard. I have to give him justice, so let me get him queued up here. Hopefully he's on the hopefully he's on the list here. Let me go through it. But let me read a little intro because this guy, his bio is amazing. So Justin Bogard helps investors learn how to be the bank. Instead of owning the real estate, as co-founder and president of American Note Buyers, he invests in real estate notes, manages multiple investment pools, and teaches note strategies that produce real estate-backed cash flow. He also partners with Colonial Funding Group as the senior note trader for their trade desk, where he prices and executes portfolio trades on house and land notes, focusing on underwriting, structure, and risk. Justin hosts the Be the Bank podcast and the monthly Be the Bank broadcast, live case studies and deal breakdowns on the American No Buyers YouTube channel. He is a contributing author to the Amazon #1 bestseller Investor of the Year in 2020. I can personally speak. We've done some business through Colonial Funding Group, so they are the real deal. Highly recommend, and I love working with them. Tonight, he's going to be presenting on bank grade seller financing, how to sell the heart of the watermelon for cash and still keep monthly cash flow. Structure like a bank, so buyers pay a premium, sell a portion of the monthly P&I, principal and interest, and you keep the remainder. So let me bring him on here. And if we were in person, everybody would be standing right now and clapping, right?
Wait.
Hey, hey,
So
Hey, Justin,
we're
can
gonna make
you
a
hear me? I can.
airplane.
I can hear you 5 by 5.
All right, my friend. Let me give you presenter access here. Well, welcome to the call. Thank you so much for sharing your knowledge and your experience. Everybody is very excited to hear. Oh, I see you. There you are.
Hello,
How
world.
you doing?
If I dig a hole outside my house, will I eventually reach you in New Zealand?
Absolutely. Absolutely. Let's find out. I'll be here.
It'll be a while. No, thanks for having me on. Big Tex, it's good to meet you. I don't think I met you in person before or over the phone yet.
Indeed. Indeed.
Well, thanks for that intro. I assume I can share my PowerPoint from my computer through the share button, right?
Yeah, you should be able to. I made you a presenter, and let me know if you're able to share your screen.
It looks like I can. I am trying to share
Beautiful.
now.
Okay. I'll let you know once you. Oh, I see it.
Okay, cool. Awesome. Well, thanks for that intro.
Pleasure.
And your friend Brian there gave an
an excellent rundown on the market and conditions. That was amazing. That was like an hour presentation shoved into 15 minutes. It seemed like that was really good. So shout out to Brian there. If there are any questions during this, Felipe, do you want to just stop me in the middle, or how do you typically handle that?
Yeah. Usually, I like to have a little Q&A at the end.
Okay.
That way, we don't interrupt your flow. And then I'll ask anybody to drop any questions on the chat, and then I'll be able to read those at the end. But then, if you have any specific questions as you're going through it, I'll be here throughout, and then we'll get through it.
Awesome. Yeah, thanks again for having me on the call. So as Felipe mentioned, I think your internet cut out a little bit. We had done some trades earlier, I think a year or two ago through Colonial Funding Group. But yeah, so my big push now is to kind of show what bank grade seller financing is. And it's how to sell the heart of the watermelon for cash and still keep monthly cash flow. So that's what I'm going to kind of get to towards the end of the presentation today. So it's all about structuring how a secondary buyer wants to pay a premium for the seller financing or owner financing paper that you create on land or houses. So I'm the co-founder and president of my company, American Note Buyers. I started this about 10 years ago. It's already went through a couple of iterations of company names. I had a business partner a few years ago that was in the note space as well, and he helped me start a fund. So we have a small $10 million 506B fund that we raise capital for, and we actually buy notes and stuff with that fund as well. And I manage other portfolios and trust accounts for notes. So I also partnered with Eddie Speed, which some of you may know him. And I'm the senior note trader on the trade desk for Eddie. So we partner together and we work on trades, large volume trades, 50 million, 10 million, 1 million, $50,000 deals, and all in between. So we handle all that through the Colonial Funding Group trade desk. So one of the first things, I kind of stumbled into note investing, Felipe. I don't think you knew my whole story. I started off being a real estate investor, and I took some seminar classes, and I did some wholesaling and fix and flipping, and I felt like I was pretty well educated on how to fix and flip houses, but I surely wasn't educated on how to sell them and market them and hit the market just right to sell them. So I didn't do very well as a fix and flipper. So that's how I kind of stumbled into note investing, because Eddie Speed actually came to town. And I live in Indiana, so the Indianapolis, Indiana area. And I learned about note investing from there. And this picture is a picture that was on one of the slides that he had when he was doing a presentation on this. And I just look at this person, they're wearing some sort of, banking business attire and pulling a wheelbarrow or whatever you want to call it, full of cash. And that kind of got me hooked. That's why I like to show it during presentations to say, and my favorite quote of all time is John D. Rockefeller's quote, where he says, own nothing, but control everything. And that's exactly what it's like being the bank in seller financing and owner financing, however you want to describe it. So I always like to say that's something I always keep in mind, that I don't really want to own the real estate. This is my personal opinion. I like to own the debt on the real estate. So what we're going to be doing is we're going to be talking about mortgage banking, but overlaying seller financing on top of it. So a lot of you on this call are watching this replay probably have done or heard of, owner and seller financing. A lot of real estate guys end up doing this, I guess, as a backfall, because they probably can't sell the real estate traditionally how they want to. And so they kind of end up in the seller finance space as opposed to making it part of their strategy. But I'm here to show you kind of what setting up the paper and the terms and everything is going to look like to make it more like mortgage banking. So there's two ways to approach this, Felipe. You can have a handmade, or you can have it all packaged together, right? So these two obviously are not the same. So that's how, when we look at paper, we know what's homemade versus what's really, compliant and proper way to do things. So, obviously you just throw something together real quick, or you can have discipline, you can have appeal to the product, and you can have longevity to it. So then the idea is to have options when you create this paper, and you do it the compliant way and you do it the right way, because you don't have to sell a note, right? You can keep it in your portfolio. I think you mentioned, Felipe, you're creating a note right now, and your plan is to hold it for however long. I think you said to the balloon, right?
Yeah, that's right. It's a short one, so we're just going to hold on for 18 months. But,
Yeah, and that's a great plan, and you'd love to have a lot of those in your portfolio. But also, if you plan on having one that's a longer amortization that doesn't have a balloon in it, perhaps sometime down the road you kind of want to recapitalize on it, and you might as well set it up right the first time, so that way you have options on the back end, and that's what we're trying to get at today. So Eddie, a lot of these things Eddie talks about in his presentations, and I talk about too. So we share a lot of each other's slides. So if you see something in common that you've seen in the past before, well, it's just because we share stuff, right? Why reinvent the wheel when we can just repurpose some of the stuff? So there's really 6 variables that we talk about that give a note its value when you create it. There's the buyer. There's obviously the collateral, whether it's land or house. There's the equity or the skin in the game that the borrower has. Typically, that's the down payment portion. In terms of the loan, like the interest rate, does it have a balloon in it, like you mentioned before? Is it fully amortized? What's the interest rate on it? What's the monthly payment? What is the frequency of the payment? They don't have to be monthly. It can be quarterly, annually. It's like whatever you come up with. If it's not a newly originated loan, we have something called seasoning, and that's pretty much what pay history is. So how many payments have they made? How long have they been making payments? Are the payments happening in a consistent basis? Are they coming in erratically? Like that kind of description can kind of tell you a lot about it if it's not a newly originated loan. So the skin in the game kind of goes hand in hand with the equity they have plus the pay history. But if it's a newly originated loan, you really only have the equity to go off of what they have in the game as far as skin. And the paperwork, how is the paperwork bundled together? Was it compliant? Was it put together off of LegalZoom or some online website, or is it put together by a professional, someone that's an attorney or the house counselor for a title company? So all those things are important. So all these 6 attributes of the note give it its value, and that's what a note buyer kind of looks at and hones in on. So I did a presentation similar to this in a couple of years ago, and I was thinking about how to position this to have it make sense. So I'm more of a math guy, so I like geometry. And so I was thinking of an equilateral triangle because I was trying to narrow this down to kind of 3 things that I want to focus on when I look at a deal. And these are 3 things that I think operators and developers and owner financiers should take into consideration and make these 3 things the first area that you start from. So there's a borrower's profile, right? It's maybe their credit score. It's maybe how they paid a past tenant, a past landlord. It could be, looking at their whole situation, their profile in general, how much money they have to put down. That's kind of fits into their borrower profile. There's the collateral. There is just, all about the collateral. It's the house, if it's a piece of land, if it's a commercial building, if that's all the neighborhood. Everything's kind of comprised into collateral. And the note terms, kind of everything else falls into that. The actual terms of the note, the documentation, how you close it. And so I kind of make these things, when I'm making a note, I want to make them all kind of equally strong, because anything that's weak in as a part of that, the note can still be bought or sold. It's not made the best way. So for the borrower profile, if you've heard of an RMLO, it stands for Residential Mortgage Loan Originator. And that is a person that is a third party that you can hire, and they can verify income. They can verify the debt to income of the buyer, look at job stability and their credit. And that's the kind of the basic things that they do. That gives you the story of the borrower profile along with their equity that they can put in the property. The collateral of the neighborhood, the type of property, like I mentioned before, the condition of it. Obviously, you don't want to have something that's broken down and beat up. You want something that's livable, that gives the buyer a chance to not have to put a bunch of money back into it. I like when Felipe, when we bought some loans from you, I remember specifically the houses that you did were completely remodeled, and there was like nothing the buyers had to do. They just walk into it, almost looked like a fresh, brand new house. And the value of the home, obviously, in the market, as Brian was showing in his screen of the United States, some areas and some pockets obviously are having a fall in value, and some are having a slight raise in value. And depending on where you are, you fit into there. So the value of it can dip and it can rise, and you don't know what it's going to be like, but the value obviously comes into play there. So on note terms, you're just talking about the rate, and the AM just stands for amortization. Is it fully amortized? Is it a balloon? The security, is it like a land contract, if you heard of that, or contract for deed? Those are kind of used interchangeably. A note deed of trust in Texas or in other states are called a mortgage. The closing, how was it closed? Some states are attorney closing states. Some states use title companies. Or was it just, done on a napkin, or, does somebody just decide to, here's a general warranty deed and a note, here, just sign this and we're good, without having any sort of title insurance. And down payment. So the attributes of a weak buyer is pretty much less than 10% equity. And if they have a weak credit profile, it doesn't have to be a weak credit score, but their profile has some sort of stain on it. Like they owe some money, they have some judgments against them, or their credit card track record shows some derogatory accounts, or they have some delinquencies. Like, you can just look at the profile in general, as opposed to just focusing on the credit score. And you can kind of see if they're kind of a weak payer or if they're a strong payer. So the only way to overcome these weak attributes is what we call seasoning. And so after about 24 payments are made on someone that has what we consider a weak profile, if they've made 24 payments on time and consistent, we see that overcompensating for the fact that they had a weak profile at the beginning of when they were buying this house on seller financing or this piece of land, even if they had a weaker down payment. So those seasoning can kind of overcome all those things and what we call forgive their credit sins. So this is a fun little visual I like to show. And the traditional way people typically do seller financing, you'll hear like 10% down is pretty common. So that's why I show this example this way. So if you create a first lien on a property that you resell on owner financing, you're going to get 10% down and create a 90% loan to value first lien. So when a note buyer looks at this stuff, they want to have some cushion built in. So they already have an idea of these 6 attributes, and they know about where they need to be in their comfort zone. And it's not going to be 90% LTV. It's going to be a little bit lower than that. So right off the get-go, you see there's a delta here between what the first lien is versus what a note buyer will pay for a note, regardless of what the interest rate is. You just got to overcome that factor. And we call that investment dollars in a note. We call that investment to value. And that's the ratio that we got to first tackle to make sure we're protected in the event if anything happens. So I say that because the lower that you make the LTV on a loan in the beginning, the closer you can get to maybe selling a loan at par or getting really close to par, depending on other factors that you do. But that gets you kind of ahead. So the buyer's got more skin in the game, and it's just overall it's less risky for a note buyer. So that's why I like to show the visual, because it's all about risk. Everything is about risk. A lot of people think that note buyers are driven by yield and they just have a certain yield requirement. And that may be the case to a certain extent. Like I have a fund, like obviously I have to meet a certain yield, but the first thing I'm looking at is the risk factor, because the worst thing that can happen for me as being a fund manager is not having cash flow. And not having cash flow is a problem. And I have to overcome that to make sure I have a lot of equity in this deal, that if I were to get it back, I can recoup that loss on the next quarter or maybe in the future quarters. But it's all about risk. So from a note buyer's lens perspective, deficiencies are what's going to lower what a note buyer will pay for a note. So for example, if the loan to value for the buyer is greater than 90%, that's a negative factor that's going against you there. If the credit is kind of substandard, and I know that's kind of a loose term without seasoning, meaning their credit could be, 600, it could be a 580, it could be a 550, something that's saying like, hey, they're not falling in the normal product here. So only thing that overcome that is going to be some seasoning, meaning they have to hold the paper a little bit longer to show the propensity to repay. The collateral could be substandard. Like we mentioned before, Felipe, the properties that you sold us, The notes that you sold us, the properties they were on was was really strong collateral, and it was well done. So if
Too
somebody
strong. I should have charged double.
you should have charged double. I know. Anybody would have lived in those. Those are great. I should have brought up some of those actually, some of those pictures. Those are nice properties.
That's not good.
But if collateral is substandard, it's something that the note buyer is aware of, and they want to make sure, like, okay, if I get this back, is it really going to value out at what they said that it was going to? And so you want to be cognizant of that. So that's something that would prevent a buyer from paying a premium right there. Weak pay history. That's if you see buyers that have a pay string of, maybe 10 months, and they don't necessarily have to be. It's okay if they go past the grace period as long as they're consistent. But if they're not consistent and they're like erratic in the pay history, that gets them into a weaker pay history, because you don't really know why. Like, it's not because they're getting paid at a certain time of the month. It's because other things are more important to them than paying their mortgage. And that's what they're trying to get caught up on before they pay the mortgage. So a weak pay history is kind of a turn off to a note buyer. And so they have to protect themselves in the event that's not going to be paying going forward. And that's what's going to, lower a little bit of the price point there. Non-compliant documentation. So if a licensed attorney didn't draft the document for that state, or if they just didn't follow the Dodd-Frank or CFPB rules, anything like that, that turns it into a non-compliant documentation, like that's something that can probably be fixed, but it's something that you have to be aware of and understand. Like, if you want to take on that risk, then, the price has to reflect that. Self-service loans. It's okay to self-service a loan, but it does become a problem, because if you're buying a loan, you have to trust the fact, and you have to go through a lot of verification that the person that was self-servicing the loan was actually documenting everything correctly. They were actually, if they were escrowing accounts, they were escrowing properly, and they weren't having a negative balance in escrows. And if they're servicing a lot of loans, depending on the state that they're in, they may be in a situation where they probably should have gotten their license to service a loan in that state. And so you have to be aware of that, be careful of that. So non-escrowed accounts, those can become a problem. Ask me why, because I've had a lot of those non-escrowed loans before, and it's difficult to manage them. And so it's another burden that you have as the note buyer going forward, that you don't really want to add that on to another layer of complexity to manage that note. It's just more difficult to keep track of the taxes if they're not being paid, and the insurance to make sure it doesn't go lapse and stuff like that. So those are the main things that stuck out to me when I wanted to write a quick list of deficiencies that will lower what a note buyer is willing to pay. Just some random examples of houses. Obviously, this is a house of a piece of collateral that anybody would love to have on a note. It looks in premier condition, and really more than likely no signs of wear and tear on it, and probably doesn't have any mechanical issues, and the roof looks like it's brand new, probably a brand new build. Mobile homes, those are obviously really popular in the outskirts of Texas, outside the main cities, and there's nothing wrong with mobile home and land. We actually like mobile home and land a lot, and we see a lot of great payers that are ITIN buyers that have mobile home and land. Sometimes better than ones that we see like in the main downtown areas. But the mobile home itself needs to be in good condition. It can't be a really crappy conditioned mobile home. It's got to have skirting on it like this one. It looks nice. This one's probably a brand new manufactured home. Need to have it attached to the land, surrendered to the land, however you call it, whatever state that you're in. Those things matter. And this would be something that you wouldn't want to have as collateral. This would be probably in what we would call the two-gun neighborhood. I think it even has some yellow tape on there. So I know that wasn't a real example of a house that we had a collateral on, but I just wanted to point out, like, the main difference between something nice, something not nice. So land, there's a whole category of things that you can define in land. It gets, if you're not doing land yourself, you probably don't think the wiser to it. Piece of land like this that is just what we call a desert lot, we call it kind of a junk lot because there's nothing really around it. It's probably landlocked because it doesn't have a main access road to get to it, possibly no easement for it. So that's the type of thing that we don't look for in land. We kind of look for things that are more, we call them realtor friendly land, because as you can tell on this slide, there's, road access on the far screen left. Looks like things are probably cut up by where the tree lines are. It's graded. It probably what they call perks for a septic. You can probably drill for a well, or it might have a city connection. It may have power poles nearby. Like, all these things are what note buyers look for to make sure if they're buying a land deal that the home buyer is going to be able to have to fulfill their dreams on it. Really, some people use it as recreational land, and that's okay. You just kind of want to know as a note buyer, like, what is the purpose for this land? Because obviously they're not going to live on it today. Maybe eventually they'll live on it, but today this isn't their primary residence. So you kind of want to understand what their situation is with their primary residence as well. So just reviewing the collateral there, no major repairs for the buyer, neighborhood safe. If you had to throw a minimum out there, I'd say probably 1,000 square feet, 3-1 is probably the minimum size to keep within the premium window, we'll say. Mobile home, obviously affixed or surrendered to the land. Land, we call it just desirable land. Like, we all can look at land and be like, yeah, that looks like desirable land, like we'd want to live there, depending on what city it's in or area. And then if you're able to build a home site on it. Probably the number one, I guess, cultural thing in the Midwest, since I live in Indiana, is a lot of people are still doing land contracts or contract for deeds. That term's used interchangeably, but it means the same thing. It's just an installment sale. And nobody gets the deed. The buyer doesn't get the deed until all the installments have been paid, basically like a car loan, as opposed to the note and deed of trust or note and mortgage, where you're truly a lender and you're not on title. So that's why I want to bring up the note and mortgage and note deed of trust. There's no property responsibilities as the note holder. And then on the contract for deed, guess what? You're the owner of record if you didn't know that. You're going to get notices. You're going to get a lot of notices, especially if they're not doing things. If they have junk in their yard, if they, the health department will give you notices if they've got like something going on that's hazardous to whatever the code enforcer says is hazardous to the area. We've gotten weed notices before. Obviously, if they're not paying their taxes, or they are paying their taxes, you're going to get all those notices because you're the deeded owner. I try to argue with the county officials all the time, like, I'm not the owner of the house, this person is, and they don't care because you're on the owner of record. Forfeitures are typically, they're unlikely. I think I've had one out of several hundred land contracts I've owned that's actually, whenever they do go to foreclosure, I'd have to go through foreclosure as opposed to forfeiture. I think I've had one that's been a forfeiture. So needless to say, a lot of judges are saying they have some equity in there and you have to just foreclose anyway. So there's really very small use cases to have a land contract or a contract for deed. But if you're able to just do the note mortgage, note deed of trust, that's exactly what you want to do. So for note terms, I always say if you shorten the AM and make it affordable for the buyer, it's just going to be better for you, because it's going to make the monthly principal and interest payment a lot higher, but you don't want it to be unaffordable. So I kind of have a rule of thumb that's around 1% of the loan amount is typically what I try to make the monthly payment. So for example, if it's a $100,000 loan amount, I try to make the P&I payment around $1,000. So a combination of interest rate and amortization. Sometimes I see loans that are 50, 60,000 and they make a 30-year mortgage on it. And that's just like ridiculous. Number one, it makes the payment really small. So yes, that's really affordable for the buyer. But if you're trying to sell that note, the discount is going to be so heavy on that note to buy a loan on it that it just doesn't make sense. So on anything less than 100,000, I'd probably say you're going to be 15 years or less on it. And once you get to 150 to 200,000, it's probably like a 20-year mortgage. And then anything over 200,000, I'd probably say a 30-year mortgage makes sense. Rates, there are usury laws in certain states that you can't go above certain rates. For example, Pennsylvania sticks out to me. They have I forget what they call it. It's called what Regulation Act 6, I think, and they have a bulletin that goes out that says exactly what you can make the rate for seller financing. I think when I looked last couple months ago, it was like 7.5%. So if you made a note that was above that, you'd be breaking the usury laws in that state, for example. There aren't many states that have, what I would say ridiculous usury laws, but there are some that do. So just be aware. Texas is not one of them. They have a pretty friendly rate. You don't have to worry about running into that unless you're charging, above 12, 15% interest rates. I want to say the ceiling is like 18 or 20%. Indiana used to be something like 25%, but that's just too much interest.
I want to say if you stay within 5% of prime, you should be good. You should be covered in all states, somewhere around there.
That's a good rule of thumb, except for Pennsylvania. I just know that for sure. It's like 7.5%, I would say.
That's why I only stick with Texas, man.
Texas
It's one state I have
friendly
to
state.
deal with. That's it. Yes, sir.
So here's what I commonly see, and this is what I would do if it was my house note or land note I was creating. I'd probably be around 9.5 to 11% for a house note. The smaller the loan balance, the more interest rate I would put on it, and it would be the inverse of that as you go up in loan amount. And same thing for land. It's typically around 10 to 12%. So the smaller tracts are getting 12%. The larger tracts, the $100,000, $150,000 tracts are getting closer to 10%. That's the range you'd want to be. If you want me to throw a dart, that's kind of, if you're in that happy zone there, you're going to be pretty commensurate to what average is. Escrowing for taxes and insurance is important, and it definitely takes the burden off you, like I mentioned before. Obviously, with land, there's not going to be insurance, but you can escrow for taxes. Note and mortgage, note and deed of trust. Avoid contract for deed if you can. In some use cases, it is, makes sense to do a land contract, but you always want to go for the note and mortgage, note and deed of trust when you can. If you're in Texas, I think you call it a wraparound deed of trust, or what's the proper term? Wraparound lien. I can't remember the exact name that you have on the document.
Yeah, wrap around.
But it's basically you can have a deed of trust and wrap another deed of trust around it. So
yeah, also a warranty deed with vendor's lien.
Yeah,
you can also call it that.
I like attorney drafted documents. Sometimes I'll use the title company to have their in-house counsel draft the documents for me. Or if you can download a Fannie Mae, if you go to their website, they have a template of different types of documents you can use. That's just a homogeneous way of doing it. Like if they figured out what's best language to put in the document, you don't have to worry about going to the ends of the earth trying to figure out a very lender-friendly, heavy document to put in there to stick it to the borrower. You just need to make something that's fair to both sides, right? So I would go out and I would go out and download a Fannie Mae document for a certain state if I hadn't been there before, and just use that document. Or like I said, if you have an attorney in a state that you primarily own or finance in, they'll probably just let you say, hey, just let me revisit this every month to make sure there's no statutes that change. I need to change some language in there and just reuse that document for them. So again, you don't want to have a handmade document. You want to have something that's buttoned up tight and obviously compliant. The last thing you want to be is non-compliant, because you don't want to have anyone knock on your door doing an audit on everything. The RMLO, there are quite a few RMLOs that have a Texas license. So if you are owner financing in Texas, you have a lot of people to choose from. There are a few that will do all the states, and there's a few that will do just certain states, because obviously there's a cost to getting your license in each state, and some of them just choose to wait until their product builds up enough before they do that. So the borrower is going to fill out a loan app just like you would if you bought a house. I lost my mouse there. There we go. The loan originator is going to run a test to make sure they have the ability to repay. They're going to verify employment and income. That's actually pretty important, because someone can state that they're employed by, I've been a construction worker for 12 years, blah, blah, blah. Unless someone verifies that, surprisingly, we've seen some RMLO documentation that doesn't have a verification of some of these things. And so you just, as the person that is the that's going to be the originator on the note, you want to verify that the RMLO is actually doing that within their. They give you like a large report if you haven't seen one. It's many pages long, but it's very good to go through and check that to make sure it's been verified. They obviously run credit if they have credit profile. Some of these ITIN buyers, as they're named, they either have a small credit profile or they have no credit at all. So sometimes you don't even see a credit score for them. They're going to provide loan estimates and closing disclosures. So that's really important to give the buyer so they are prepared for the settlement statement. And they're obviously going to be an unbiased third-party underwriting. So an originator can actually get their own license and originate loans that way. A lot of people just like to use the third party just because it's unbiased and it's just another way for a vendor to be involved in your operation to where you don't have to worry about that step. And the cost typically isn't that bad. I think a few of them will be around $700 to $800 to do what they call an ATR, an ability to repay test, and then a full origination usually I believe is in between let's say $1,200 to $2,000 per loan. I think is the range that I've seen with several different RMLO people. So you don't want the buyer that's in a sinking ship, right? So if you look at their credit profile and everything sounded good when you were on the phone before you sent them to underwriting, but after underwriting, you look at their profile and you look at their situation and be like, oh yeah, it's a sinking ship. You don't want to have that person go through. It's just going to be a failure for both sides. They're going to fail at paying you at some point. They're going to get tripped up and not be able to afford to stay there. And then you're going to get stuck with a non-performing asset that you would prefer to have cash flowing. Or if you're trying to sell it to somebody else, you don't want to give somebody else something that's going to fail. That's supposed to be performing. Closing and title. It was mentioned before, someone that was your sponsor, I think, mentioned this. So everyone knows about an owner's title policy, right? And what it insures. Well, there is a lender's specific title policy as well. And it's typically very, very small cost. I want to say like a couple $100 usually in a transaction. And that just guarantees that the lien's in first position because that's what you're trying to be. And that will pass from future lender to future lender on the same note as well. Setting up the escrow from the beginning is a good idea. Having the buyer pay a full year's premium up front. So that way, when there's escrowing for the next month, they're building up for the next premium that's coming due in 11 months, 12 months. Setting up the loan servicing documents from the beginning, right there at closing. If you have a servicer in mind, typically people just use one servicer when they're originating loans just because it's easier to have a process set up. And you can have all the documents ready for the borrower to fill out so the loan is set up with a servicer from day one, and you don't have to be responsible for collecting in the payments or sending out the 1098 INT forms to them at the end of the year and managing the proper deduction of principal and collecting escrow. That's what the loan servicer does, and they're licensed in the state that you're in. They have disclosures at closing that you need to disclose. Certain states have certain disclosures that have to be done. And so you want to make sure you're using the proper title company or attorney closing agent. You'd be surprised how many times I've seen people close loans, Felipe, that don't use a title company. And they just willy-nilly go through the deal. And they said, oh, when I bought the thing, I got title insurance. And just like, that's just not the right way to do it. You never know what happens by the time you bought it, by the time you sold it. Final settlement statement that gives you a great rundown of the debits and credits for both sides of both parties. So that's bank grade seller financing. Structure it like a bank so buyers pay a premium. And so now I want to talk about one strategy that you can do for an exit on loans. And Felipe, just stop me if there was any questions that I hammered past. So this is an example of a house in San Antonio. I don't remember when this deal went through. It might have been a year and a half ago. But this was a rental, and it became vacant, and the seller financier decided to sell this on owner financing. This wasn't one of yours, Felipe, was it? Doesn't look familiar? Okay.
No, not us.
Okay.
Not in San Antonio.
Yeah, you're not in
Did the
San
good
Antonio.
cities.
You're in Dallas, Fort Worth area, right?
Yeah, we did the good cities in Texas.
Right. So the market value was said to be 230,000 this house, and the rent, what I consider not that good, it's 1540 to rent was the rent to rent this house out. So they decided to owner finance it. They put it on the market for 225, found a buyer. They put 25 down, so that $200,000 mortgage. They put a rate on there at 11.25, so they had a strong rate on there. 30-year mortgage, and so the monthly P&I was 1943. That's just principal and interest, doesn't include taxes and insurance. So remember that slide I was showing before where it had the picture of the house and it showed the 90% LTV loan and then what the investment and the value was for the note buyer? So the question you should have been asking, well, how do you overcome that if it's a good buyer with, a 10% down payment and they have a decent credit profile and it looks like they have a strong ability to repay? Well, something that we named, we called it a participation. And so this strategy is where you actually sell a split of the monthly cash flow. And that split can be any sort of numbers, right? It can be 80-20, 75-25, 60-40, 50-50, like however you want to dice it and slice it, it can be done that way. But it's a way for you to get recapitalized on your loan without really having to take much discount at all. And sometimes, if not any discount on your note. So for this example, I believe this house was 75% split in cash flow. So 75 that they sold and 25% of the monthly P&I they kept. Right. So that's 1457, 486. So this is a little timeline here of the cash flow. And keep in mind, this person's basis in the deal, it probably isn't 200,000. It's probably much lower than that. But for the conservative sake of this example, I just wanted to say the basis is 200,000, basically the note on it. So it's saying like if they had $225,000 of basis in this house, they got $25,000 down, their basis is 200,000, right? That's what we're saying. So when you split the P&I up, you're showing this 75% portion you're selling for that amount, 162,581. And every month you're getting a payment that comes into both people. So the borrower makes their 1943 payment to the servicer, and the servicer splits it to two different entities. 75% went to this one, 25% went to that one. Every month it just goes like that. So it's different from a partial. A partial is where someone would say, I want to buy the next 10 years of full payments every month. And then after 10 years, it's going to reassign back to the note seller so that they can keep the back end payments, right? It's a really cool wealth strategy, but not everybody wants to use that strategy. They want to apply in today's time, and they want to see cash flow coming in today while also getting recapitalized a little bit on their note as well. So that's the idea behind this. So $486, that means they got about $37,500 basis left in this deal. And so over 30 years, obviously that would net them, $175,000. So splitting up that cash flow in the math, and this is what's cool about it. So you got these prices, right? So if you were to take 75% of $200,000, Felipe, can you run the calculator on that real quick and just say what that number is? So the original loan amount was $200,000, and we bought 75% of the cash flow. So what would be 75% of the unpaid balance?
150.
$150,000. And how much did you sell that portion for? $162,500. So is that under par, at par, or over par? That would be over par, right?
Mm-hmm.
So if you sold 75% of the cash flow, but you got more than 75% of the balance, that's good, right? That's a gain right there, right? And the reason why is because when you set it up this way, a institutional buyer can pay a lower yield for it, and the yield just happened to be lower than what the coupon was on this note. And that's why it's like you're paying over par for it in this situation. So then what's held in reserve from the person selling the paper, that little strip, as they call it, that's remainder, they're actually making a lot higher yield on their money for doing it this way. So that 37.5 is netting them 15% yield on their money, amortized over 30 years. Because the coupon was 11.25. So if the coupon was 10.2, Felipe, then the price, the note in this situation, it would have been sold pretty much at par. Let's just say that section of it. If they sold the full loan, they wouldn't be able to sell it at par because of that investment to value ratio. Let's just say they had to be at 80%. And so they would have been taking let's just say a 10% haircut just off the top just so they can meet that threshold. So that's what this strategy does. It's kind of a cool strategy. It kind of doesn't make sense at first when you look at it. You kind of have to run through the numbers several times to kind of make it understand. But that's what we call the participation. So it's a unique way of being able to sell the heart of the watermelon, like we say, but also keeping monthly cash flow. So if you imagine doing this over several loans within your portfolio, so you don't have to give up any discount, let's say, or very little discount, and you still get to keep cash flow. And that cash flow kind of helps you move along in your business. So that's why I wanted to show that today. And that was the main part of the presentation there. So just going back to order of events, if you want to know a timeline of how this is working, if you're a real estate guy, you're purchasing or repairing the property, you're designating the loan terms or talking with, let's just say, somebody like me that can help you design what the terms would want to be like and how you would exit them. You're going to market to the buyer in your area, however you market, Facebook, put a sign in the yard, a specialized realtor that specializes in owner financing. You're going to send them to an RMLO once you pre-qualify the buyer. RMLO is going to give you a score. If let's just say they pass or fail, they're going to show you the profile if you want to move forward. You're going to close them at the title company like we showed you all the examples, and then you can exit the loan sale. So you can sell a note after you originate it. You don't have to wait for seasoning, but sometimes you want to wait for seasoning because they have some sort of negative factor that's pulling down what you can sell your note for and get a premium later in the future. So I hope that made sense.
Yeah, no, that was great.
So this is a way that you can get a hold of me if you would like to. If you have something you want to get priced or sold, we like to run things through the Colonial Trade Desk just because it's a bigger operation and things can be handled easier. So it's simple: trade desk at colonialfundinggroup.com. And I didn't want to go too far, Felipe. So if you had any questions or Q&A that I wanted to be able to respond to them.
Yeah, no, this is perfect. This was great. If anybody has a question, either raise your hand or just drop it in the chat and we'll go over that. Are there any major red flags, Justin, that you've seen lately? Any trends going around?
So I would say the trends that I'm seeing, something that sticks out lately was what I brought up about the title policies and not closing at a title company.
Yeah.
I've seen some real estate investors buy a property and they'll go through a closing and get an owner's title policy. But then when they do whatever they do to the property and they resell it to a buyer, for whatever reason, they decide they don't need to go through a title company again. And so they don't get another policy to transfer to the new buyer, nor do they try to get a lender's title policy. So that to me is a red flag of, either not that they're trying to hide something, but it just doesn't look good on them when they don't make the effort to go through to make a loan compliant and go through the proper process.
Yeah. Just trying to shave off a few $100 on that title policy is the reason they're doing that.
Yeah, nobody likes to have the title company slow you down, and I get it. But there's a reason why it takes time, and there's a reason why you want the insurance. And until it happens to you, it's like I used to ride motorcycles all the time, and they'd say, there's two things going to happen: you're either going to go down or you're going to go down in the future. And at some point, you're just going to fall off your bike, and it's true. Because I fell off my bike before.
Yeah.
So it's with insurance, you just want to get insured on your note that you have. It's just peace of mind, because if you've done just a small handful of them, you're probably not going to run into an issue, right? But if you've done hundreds or thousands of loans or thousands of transactions, if you held a lot of loans to your portfolio, at some point, if you miss a due diligence step, it comes back to bite you if you didn't catch it up front. So that's why I like to show people what bank grade seller financing looks like and say, hey, if you want to make the cream of the crop stuff and not really have an issue, this is the way you need to follow the rules and stay compliant.
Beautiful. Quick question. When you have a default, do you like selling the non-performing note? Or I'm sure it's going to depend on the collateral, but do you like doing full foreclosure and turning around the property?
So that's a great question. And it's a question that you should be asking. And it kind of depends on your cost of capital. So if that cost of capital is burning me pretty bad, I may have to try to figure out how to sell the note so I can get recapitalized so I can move forward. But if my cost of capital isn't affecting me in the moment, I'm going to try to work with the buyer to come up with a solution for maybe them to be able to start paying again, whether that's re-amortizing the loan, modifying the loan, going through a trial payment. But if I find out they just can't afford it, then unfortunately I have no choice but to foreclose or get a deed in lieu from them. So I just aggressively go down the path of work with them first, see if I can get a deed in lieu second, and then I have to foreclose last. And in some states, it just takes forever to foreclose. I just went through a note and mortgage foreclosure in Ohio that took almost 3 years because one of the borrowers passed away. Of course, they didn't have a trust set up or a will, so I had to go through probate. And then the surviving borrower went through bankruptcy. So I finally had that on the market today, and I'm closing on it next week. It's been almost 3 years of it being non-performing.
Oh,
So that's worst extreme case scenario. So you have to be prepared for that if you're going to go through foreclosure. But like in Texas,
what state was that?
That was in Ohio.
Okay.
Yeah.
That's why I like Texas.
Yeah. Texas is
21
pretty
days.
fast. It's good. There's other states that are pretty fast too. I think Michigan's a pretty good state. Missouri is a good state. Tennessee is a good state for quickness. North Carolina is a good one too. I think South Carolina is pretty good too.
Okay. All right, my friend. Well, I don't see any questions in the chat, so this is your last chance. You want to take advantage. Justin is a wizard. So every time I get somebody wanting to sell me a note, I always run it by him, and he always helps me out. So I highly recommend you get in touch with him. But hey, man, thank you for coming on. I appreciate it. We're gonna get this recording, the replay out to everybody. So don't be surprised if people reach out and contact you.
Awesome.
And
Love
hey,
to help them
Justin,
out.
I'm
Thanks for having me on.
Thank you,
Justin,
Justin.
I'm in
Appreciate
Ohio,
you, friend.
kid.
Oh, you're in Ohio?
I'm from Ohio. I'm an Ohio kid, so I mean we share what do they call us? The North Central. What is our? We share that energy. I guess that's it. Huh?
Right on. All right. Well, thanks, guys.
All right,
I'll hop off the camera here.
Awesome. Thanks again, Justin. Appreciate you. All right. Let me get my screen back in here. Man, that was great. Did you guys
That was
good
really
info out
good.
of that? Awesome. Can you see my screen, Big Tex?
I can.
All right. Well, let's get the party going. We're almost to the end, guys. So thanks for sticking around. Let's see. If you want to present at our Dealmaker DFW, scan this code. As long as you are an expert like Justin is with seller finance, you are welcome to. But no, the only thing we ask is you share real experience, you be genuine. That's what the community is all about. But we would love to hear your story, hear any investing lessons, anything that you think would be worth sharing. We'd love to have you. And if you want to become a sponsor, if you want to get your brand or services in front of hundreds of real estate investors, scan that QR code. We make it super affordable. We just want interaction and collaboration. And yeah, so we'll get through the. Okay, so let's give away some prizes. If you want to win prizes, we have 6 prizes today.
What do we
They
have,
all
Felipe?
were What's that?
What do we have? I got a fake drum roll going right here.
Right. Come on. Let's hear it. Scan this QR code right here, and you will be entered to win. And I'll go over the prizes that we have. Let's see. Okay, it's right over here. We have a $25 Amazon gift card that is virtual. So I will email you the link where you can claim that. We also have a $50 Amazon gift card. We have an ebook called False Profits by Benny Fisher and Chris Giorgio. It's not the top line that pays you. Excellent book. We also have 2 general admission tickets for in-person meetup on June 4th. We have a $50 travel rebate coupon from Odyssey Soul Travel. This is Geraldine's travel agency. She's giving a $50 rebate when you book your next trip using her services. And let's see, the last one we have, it's a lifetime subscription to my growth by acquisitions platform. It's $2,500 lifetime, and I'm giving it away. This has it's got a lot. It's got over 47 courses on absolutely everything acquisition that you can think of. We're talking about mobile home park investing. We're talking about M&A, talking about the QLA seminar when I spent some time with Dan Pena. We're talking all things scalable, RV parks, multifamily, acquiring small businesses. It's got over hundreds of hours. So I'm giving that away. And I think that's it on the prizes.
Okay.
So yeah, not too shabby. This is the last chance right here. So if you wanna be a part of it, scan this right here.
We got
Wait,
18
once.
and we got 18. So the odds of them somebody winning is going really good.
Yeah, that's it. All right. Well, let's keep going here. All right, so we're gonna start with the $25 Amazon gift card. Let me play some music on the background. Let me play some music. All right, $25 gift card. Ashley B is the winner of $25 Amazon gift card.
Ashley, are you
Next.
here?
Next we're gonna give away. It's gonna be the ebook. Let me write down real quick. The next is gonna be ebook, False Profits, and I will email you the PDF. That's correct. Next. Joe Torres is the lucky winner. Right. The next one we have is going to be the information for the Deal Breaker DFW in-person event.
Can you turn the music down? Right here.
All right, that was for the maker tickets. Next one we have is going to be the college travel. John 50, and I will find your email, whoever's registered under John, $50 rebate. All right, next we got 2 prizes left. The
Okay.
next one, let's do $50 Amazon gift card. $50 Amazon gift card. Ashley Age. Nobody's writing their name. Everybody's anonymous. All right. I got the last one is gonna be the it's gonna be the Growth by Acquisitions school platform. Last prize of the night.
I like these avatars. They're funny.
Jennifer Cross, Growth by Acquisitions. Okay. That's all the winners. That's all the winners for tonight. All right, guys, let's see what else we got in store for you. We had our in-person event March 5th. I'm going to drop this in the chat. If anybody wants to watch it, if you missed it, it was a great night. We actually have the full recording here, Big Tex. I didn't even know if you knew this or not, but
I
it's
did
on
not.
YouTube. Yeah, it's on
Okay.
YouTube. You can also get all the media, all the photos, and all the video files that we did. You're welcome to take full advantage of that. We have the full show notes here. We had the keynote speakers of Rick and Crystal Rummer, and then we had the gentleman builder, Royce. So you're welcome to download the slideshows, everything. It was a great event. What'd you think? How'd you think it went, Big Tex? Did you have a good time?
Oh man, that was I like I said, man, that in person was high powered, it was full energy, the speakers. I am positively looking forward to the next one.
Yeah, me too. June 4th is going to be our next one, and I will send the link if you want to catch the replay. And then we're almost through the end, guys. We have a 3-day intensive Dealmaker Catalyst event in Richmond, Virginia. It's just around the corner. It's actually this weekend. It's March 22nd through the 24th, I believe. I missed due to me being in New Zealand, but next year we are definitely going to be there. This is going to be our next virtual event. It's going to be a powerhouse. It's going to be Mr. Chris Peterson. He's the founder and president of Well Builder 1031. He is a 1031 exchange expert, and he's going to break it all down, what you should know for yourself and for your clients. So you don't want to miss that. Third Thursday of every month, April 16th. Then let's see. We also have my raw deal drop that I do. The next one is April 7th. If you want to join us, it's 2 hours, and we do a breakdown from A to Z. I show everything, every document, everything, how we structure, how we financed it. It's always a good time. It's a lot of work too. This is the next in-person, June 4th, at the Augustos in McKinney. Food Bites by Loco Yoco. It's delicious. We're going to have Scott Horn. The guy has done over 10,000 transactions, guys. He's the real deal. He's been around for a long time. Every investor that I know has worked with Scott at some point. So he's going to be doing a segment, Ask the Title Attorney. And then that's going to be wonderful. And then we're going to have Major Hiller. He's actually flying in from Clearwater, Florida. He's a leader of Dealmaker Tampa Bay, and he's a huge mobile home park investor. He's got a fund. I'm actually going to his meetup in October that I'll be speaking at. And then he's doing this favor in coming June. So you don't want to miss. It's going to be good. Bring all your questions. And if you like what you saw today, I have a book coming out. It's called Become a Lean Lord. And we're going to be talking exactly that, what Justin talked about today. All about seller finance, all about private lending, how to sell notes, that type of thing. So that's coming out in June, I think. And I have another one coming out called 48 Laws of Flipping. So I'll make sure I'll do a giveaway of this when the time comes. But if you like this topic, you will be in good hands. And all the mighty men in the call and all the men around Dallas Fort Worth, every Saturday morning, 400 plus strong leaders get together in Frisco for a Bible study at 7 a.m. every morning. I hope you can join us. It's led by a former Navy SEAL, Garrett Uncleback, and it's an amazing group. It's personally changed my life, so I hope you can join us. There's also a live stream. If you're not local, you can join us. And I think that's all I got for tonight, Big Tex. Do you have anything else for our beautiful people here on the line?
A quick question. Any update on the mobile site, the app?
I have it ready. I just need to publish it on the native. For right now, the website is pretty mobile optimized, so you can do that. We are working on having an actual community feed in there that you can download and interact. But I'm just waiting on, even on the deal maker, you're going to have access to that. So we're working on it. We'll get it launched. Right now, you can just use the website, which is pretty optimized.
Okay, and I think that follows up to what my next statement is. Guys, go to the website. Like, take some time, click through. There's a lot of resources inside of here. The things that you hear during the virtual and in person, like Felipe just said, they're in that website. So definitely take some time when you're sipping your coffee or having a cigar or a bourbon or some wine, and just kind of flick through, and there are questions that can be answered for you inside of the website.
Absolutely. But all right, guys, we're a little bit early today, which is good. I like that. I just don't want to go over it. But thank you so much for being on the call. Thank you, Big Tex. Thank you, everybody, for showing up. I will send the recording out. Reach out to Dustin if he can be of any help. Reach out to me if I can help you in your business. Check out our sponsors. And I love you guys. Thank you so much. We'll see you next month for the virtual. And don't forget the in-person in June 4th. But you guys have a good night. And I'm going to go enjoy New Zealand now.